Most veterans and active military don't know that they can refinance without an appraisal. There's no credit check or income verification. Today, we're going to fix that. Because if you're sitting in a VA loan right now, there's a program that most lenders, they just don't tell you about, especially if you're in it, unless you actually ask. It's called the VA Interest Rate Reduction Refinance Loan, or the VA IRRRL. And here's what makes it different. You can lower your rate, drop your payment, and the entire process skips most of the steps that make refinancing so painful. No income verification, no credit check, and in most cases, no appraisal. In fact, appraisal is not required, but some lenders may require it. If that sounds too simple, that's because the VA designed it to feel that way on purpose. Let me show you how it works and whether or not you qualify. I'm Darin Hunter. I run Mortgage Right Branch in North Metro Atlanta. We work with veterans across the country, active military, and folks who've used a VA loan to buy their home. And one of the most underused tools is the VA loan that's called the IRRRL. Most people, they just haven't even heard of it. And the ones who have think it's complicated. It's not. So let's break it down piece by piece, because if you qualify, this could save you hundreds of dollars a month without the usual refinance headache. First, let's talk about who this is for. The VA IRRRL is only available if you are already in a VA loan. That's the baseline requirement. You can't use this program to refinance a conventional loan or an FHA loan into a VA loan. It's strictly for people who already have a VA-backed mortgage and want better terms. Now, here's where it gets pretty interesting. You don't have to be living in the property right now. Did you hear that again? You do not need to be living in the property right now. You just have had to lived in there at some point in the past. And this is a huge deal if you're active military and you've been reassigned. Or if you bought a house with a VA loan, lived there for a few years, and then turned it into a rental and when you moved on. As long as you've occupied it at some point, you are eligible. That flexibility is rare in the mortgage world. Most programs lock you into strict occupancy rules. The VA understands that life doesn't always work that way, turns out. The main goal of the VA IRRRL is to lower your interest rate and therefore your payment. And that's it. You're taking your existing VA loan and you're replacing it with a new VA loan at a better interest rate. Lower rate means lower monthly payment. Lower payment means more monthly cash flow. And if rates have dropped since you bought your home, this could save you a significant amount of money over the life of the loan. But here's the part most people miss. You can also use your IRRRL to switch from an adjustable rate mortgage to a fixed rate mortgage. If you bought your home in a VA ARM and your rate's about to adjust, you can lock that into a fixed rate before that happens. That gives you payment stability and protects you from a future rate increase. We don't see as many VA ARMs as you used to, but if you have one, this is a great opportunity to lock it into a fixed rate, especially as rates have come down. Now, let's talk about the process. This is where the IRRRL really separates itself from every other refinance option that's out there. Most refinances require a mountain of paperwork: tax returns, pay stubs, bank statements, employment verification, credit checks. The IRRRL skips all of that. In most cases, lenders don't need to verify, and I say most because, again, that could be a lender overlay. The VA does not. They don't check your employment. They don't pull your credit. They don't require an appraisal. And that last part is enormous. If your home value has dropped, it doesn't matter. If you think about what's taking place right now, you may have bought recently and those values may have dropped just a little bit. You can still refinance if you don't have equity. It doesn't matter. The VA doesn't care what your house is worth right now because the loan is already backed by the VA. They're just letting you improve the terms. It's pretty simple. That means you can refinance even if you're underwater on your mortgage, which is almost impossible with any other loan program that's out there. So why is this process so simple? Because the VA designed it to be that way. The whole point of the IRRRL is to make refinancing fast and accessible for veterans and active military. The government doesn't want you jumping through hoops to save money on a loan you've already qualified for. I wish that was the case for all mortgages. I get it. It's much more complicated than that, but it would be phenomenal, wouldn't it? That's why they stripped out the unnecessary steps. No appraisal means no waiting for home inspections to be completed. No income verification means no digging through tax documents to find something that you wrote off to count against your income. No credit checks means not worrying about your credit score if you've had some sort of hiccup along the way. You've already proven you can handle a VA loan. The IRRRL just assumes you still can. There are 2 timing rules you need to know about. The first one is the 210-day rule. You have to wait at least 210 days from your first payment date on your current VA loan before you can close on an IRRRL. That's roughly 7 months. And you have had to made at least 6 consecutive payments on time. You cannot have any 30-day late payments. This rule exists to prevent people from refinancing too quickly. The VA wants to see that you've established a payment history and that refinancing actually makes sense for you. It's a safeguard against impulsive decisions. The second rule is about occupancy, which we've already touched on. You have to certify that you've previously occupied the home. Not that you currently live there. I want to make sure that's clear. Just that you've occupied it at some point. That distinction matters if you've moved or you've been reassigned. As long as you've lived there in the past, you're good to go. Now let's talk about cost, because nothing in life is free, let's be honest. The IRRRL does come with a VA funding fee. For most veterans and active military, the fee is 0.5% of the loan amount. So if you're refinancing a $300,000 loan, the funding fee will be $1,500. Now, that may sound like a lot, but here's the great news. You can roll that into the loan, so you don't actually have to come out of pocket. It just gets added to your loan balance. And if you're a veteran with a service-connected disability, you're exempt from that funding fee entirely. So no funding fee if you're collecting disability. Same goes for the surviving spouses of veterans who died in service or from service-connected disabilities. The VA waives the fee as a way of recognizing that sacrifice. Beyond the funding fee, there are other closing costs. Lender fees, points if you decide to buy down the rate, title fees, recording fees, taxes that your county or state may require. But the VA limits how much a lender can charge on an IRRRL, so the costs are generally lower than a traditional refinance. And just like the funding fee, these can all be rolled into the loan if you don't want to pay out of pocket, which most people prefer not to. In fact, most of the veterans I work with choose to do exactly that. They just roll it into the loan. They walk away from the closing without writing a check at all. Now let's talk about the math. How much can you actually save on an IRRRL? Let's say you have a $300,000 VA loan at 6.5%. Your monthly principal and interest is about $1,896. If you refinance to 5.5%, your new payment drops to $1,703. That's a savings of $193 a month. Over 30 years, that's almost $70,000 in total savings. And if you factor in the reduction in total interest paid, the number gets even bigger. Now you have to weigh that against the cost of refinancing. If your closing costs are $3,000 and you're saving about $193 a month, it takes about 15 months to break even. After that, it's pure savings. That's a pretty quick payback period. And if you're planning to stay in the home for more than a couple years, the IRRRL is almost always worth it. The VA requires that you have recaptured those costs within 36 months. So in most cases, even if you're not dropping your interest rate super significantly, if you're recapturing the period, it can make sense. But here's where most people get stuck. They hear about the IRRRL and they think, that sounds great, but I don't know where to start. Or they assume their lender is just going to reach out to them when rates drop. Well, here's the truth. Most lenders are not going to do that. They're not required to tell you about the VA IRRRL. It's in their nature. They're banks. They want to collect that interest. They're not incentivized to lower your rate. That's the bottom line. If you want to take advantage of this program, you have to be proactive. That means keeping an eye on interest rate. That means reaching out to us who specialize in VA loans. That means asking the question, does an IRRRL make sense for me right now? Because if you wait for somebody to come to you, you could be leaving hundreds of dollars on the table, which will equal tens of thousands of dollars over the life of the loan. Here's a scenario where the VA IRRRL really shine. Let's say you bought a home 2 years ago and the VA loan was at 7%. Rates have dropped since then, but you're not sure if refinancing is worth the hassle. With a conventional refinance, you'd have to gather all your financial documents, go through underwriting, get an appraisal, and hope your value supports the new loan. With an IRRRL, you skip all of that. You fill out a super basic application, verify that you've made your payments on time, and you close in a matter of 2 weeks. No stress, no paperwork overload, no appraisal risk. That's the power of the VA IRRRL. It removes the friction that keeps people from refinancing even when it makes financial sense. Here's another scenario. You're active military and you got reassigned 2 years ago. You kept your original home as a rental property because you couldn't sell it at the time or you just want to build your portfolio. You're still paying the higher interest rate from when you bought it, and it's eating into your rental income. With an IRRRL, you could refinance that property even though you're not living there anymore. You can have multiple VA loans. You lower your rate, increase your cash flow, and turn that rental into a better investment. Most refinance programs are not going to allow you to do that. The VA IRRRL, it does. So here's what you need to do if you think you may qualify with, and if you're in a VA loan, you pretty much do. Step one, check your interest rate. What is your current interest rate? If interest rates have dropped by at least 0.5% since you got your loan, an IRRRL is worth exploring, believe it or not. Step two, make sure you've made at least 6 payments on your current VA loan and that 210 days have passed since your first payment was due. If you meet those requirements, you're eligible. Step three, reach out to me and my team who specialize in VA loans. Not all lenders handle IRRRLs the same way, and you want someone who knows the program inside and out. We will run the numbers for you. Find out what your new rate would be, what your new payment would be, and how long it's going to take for you to break even on the closing costs. If the math works, you move forward. If it doesn't, you'll know you at least explored the option. And then, like I mentioned before, we have to maintain a 36-month recoup, so in most cases it makes sense. Here's the thing about the IRRRL that most people don't realize. It's not just about saving money, it's about simplifying your financial life. Lower payments mean more flexibility in your budget. A fixed rate means predictability in your monthly expenses. And the streamlined process means you're not spending weeks gathering documents and stressing out whether or not you're going to qualify. The VA built this program specifically for veterans because they understand your time and financial stability matter. If you've served this country, you've earned the right to access the tools that make life easier. The IRRRL is one of those tools. Now, I want to address a common misconception. Some people think the IRRRL is only worth it if rates have dropped dramatically. That is just not true. Of course, the lower the rate, the more return you're going to see, the better payment you're going to see. But even a small rate reduction can absolutely add up over time. A 0.5 point drop might only save you $100 a month, but over 30 years, that's $36,000. And because the closing costs on a VA IRRRL are lower than traditional refinance, your break-even point comes even faster. So don't dismiss the program just because rates haven't plummeted precipitously. Run the numbers. You might be surprised at how much you can save. If you have a VA loan, the IRRRL is one of the best refinance options available to you. It's fast, it's simple, and it's designed to save you money. But it only works if you take action. Rates change, market conditions shift, and the window of opportunity doesn't stay open forever. If you're sitting on a VA loan and you haven't looked at your rate in the last year, now is the time to check. Reach out to me, ask about the IRRRL. My team and I will run the numbers for you. If it makes sense, we just move forward. If it doesn't, you'll know at least that you explored the option. Either way, you'll be making a more informed decision about your mortgage, and that's always worth the effort. If you found this helpful, do me a favor, drop a comment, ask some questions. Let me know how I can help or at least put you on track. Are you a veteran with a VA loan? Have you looked into refinancing? I'd love to hear where you're at in the process. And if you know another veteran or active military who could benefit from this information, do me a favor, share the video, like, subscribe. The more people who know about the IRRRL, the more people can take advantage of it. Thanks for watching, and that is guaranteed.